Welcome back to Today Assets Report, the channel where we cut through the noise and bring you the market moves that actually matter. I'm glad you're here today because what we're about to break down is one of those moments you're going to look back on and say, I was watching when this all started. We're talking about Vanguard. Yes, that Vanguard, the same company that built its entire brand on conservative, old-school, boring-by-design investing, quietly opening the doors to XRP ETF access for its clients. And before you shrug that off, before you think this is just another crypto headline trying to grab your attention, I need you to understand the full weight of what just happened. This is not a small story. This is not a footnote. This is a seismic shift in how the most powerful financial institutions on Earth are positioning themselves around digital assets, and XRP specifically is sitting right at the center of it. So buckle up, because today's report is going to connect every single dot. Voice. Let's set the stage properly, because context matters here. Vanguard is not some regional brokerage or a small fintech startup trying to grab market share. We are talking about the second largest asset manager on the entire planet. They manage trillions of dollars in client wealth. Their decisions don't just reflect market trends, they create them. When Vanguard moves, every other financial institution watches. Every competitor recalibrates. Every portfolio manager picks up the phone and starts asking questions. That's the kind of institutional gravity we're dealing with here. And when a firm of that size, with that kind of reputation for playing it safe, decides to quietly allow its clients access to the Bitwise XRP ETF, that is not an accident. That is not a glitch in their system. That is a calculated, deliberate, boardroom-approved decision that tells you everything about where the smart money is starting to flow. This is the signal we've been waiting for, and it arrived without much fanfare, which honestly makes it even more powerful. Voice. Now here's what makes this story absolutely wild, and I want you to really sit with this for a second. Vanguard did not just resist crypto in the past. They were openly, publicly, and almost aggressively against it. Their own CEO went on television and said, Bitcoin is not a store of value. He said it doesn't belong in a long-term portfolio. He said their funds invest in assets with underlying cash flow, things like stocks with forward earnings and bonds with coupon payments. He made the argument clearly and confidently that something like Bitcoin was too volatile, too speculative, and frankly too unpredictable to have any real place in retirement savings. That was the official Vanguard position, delivered on camera with total conviction. And now, without any big press conference, without any dramatic reversal announcement, they are listing XRP ETFs on their own platform under the digital assets category. That's not a policy shift. That's a retreat, a quiet, strategic retreat driven entirely by one thing, which is client demand that became impossible to ignore. Voice. Go ahead and pull up Vanguard's own website right now if you want proof, because this is all sitting there in plain sight. Under the non-Vanguard funds section, in a brand new digital assets category, you will find the Bitwise XRP ETF listed alongside other products. You've got Canary, you've got Rex, you've got multiple options now accessible through one of the most conservative investment platforms in the history of American finance. Platforms do not casually add entirely new asset categories, folks. That is not how institutional finance works. There are compliance reviews, legal sign-offs, executive approvals, and risk assessments that go into adding a new category to a platform like Vanguard's. The fact that it is there means someone in that building looked at the demand data, looked at the competitive landscape, looked at what BlackRock and Fidelity are doing, and made the call that the cost of staying out was now greater than the risk of getting in. That is a massive statement about where we are in this cycle. Voice. Let's talk about BlackRock for a moment, because this is where the story gets even more interesting. BlackRock is the largest asset manager in the world. They've already stepped into the Bitcoin ETF space in a significant way, and the market responded exactly the way you'd expect. Flows came in, attention followed, and the institutional narrative around Bitcoin shifted almost overnight. But here's the corner they now find themselves painted into. If Vanguard, the company that publicly called crypto speculative garbage, is now giving its clients access to XRP ETFs, then BlackRock cannot afford to sit on its hands. The pressure is no longer coming from retail investors or crypto Twitter. It's coming from within the institutional world itself. When the second largest asset manager starts moving toward XRP, the largest one has to respond. That's not optional in this industry. You either keep pace with the flows or you watch your clients walk out the door to someone who will give them what they want. This is the institutional arms race beginning in real time. Voice. I want to bring up something that perfectly illustrates what happens when a dominant player refuses to adapt, and that's the Blockbuster and Netflix story. Blockbuster was the king. They had the stores, the brand, the customers, and the infrastructure. Netflix showed up with a completely different model, and Blockbuster laughed. They didn't take it seriously. They didn't adapt fast enough, and then, almost before anyone realized what was happening, Blockbuster was gone. The same exact dynamic is now playing out in traditional finance with digital assets. The institutions that adapt early, that open the doors and give their clients access, are going to capture the flows. The ones that hold on to outdated ideological positions about what belongs in a portfolio are going to watch their assets under management shrink as clients migrate toward platforms that actually serve their needs. Vanguard just blinked, and once the second largest firm blinks, every single competitor has to make a decision and make it fast. Voice. Now let's layer in another piece of this puzzle that most people completely missed while the Vanguard story was developing. The Federal Reserve quietly injected $13.5 billion into the banking system through overnight repos. To put that number in perspective, that's one of the largest emergency liquidity injections we've seen since 2020, back when everything was falling apart during the pandemic. You don't pull a lever that size for no reason. Repo demand does not spike like this unless there is real funding stress happening somewhere beneath the surface. Someone in the financial system needed cash, and they needed it urgently, and the Fed stepped in to provide it. Now, what's remarkable is that the markets didn't panic. There were no screaming headlines. There was no visible crisis. It happened quietly, efficiently, and most retail investors had absolutely no idea it even occurred. But you need to understand what this means for crypto, because the connection is direct and it is powerful. Voice. Every single time the Federal Reserve injects liquidity into the financial system, risk assets respond. That is not a theory or a hope. That is a documented, repeatable pattern that is played out across multiple market cycles. When money gets pumped into the system, it has to go somewhere. It flows into equities, into real estate, and increasingly into digital assets. And here's what makes this moment different from previous liquidity injections. The infrastructure is now in place for institutional money to flow directly into crypto. XRP ETFs are live, Bitcoin ETFs are live, Vanguard just opened the access pipeline. BlackRock is feeling the competitive pressure, and the Fed is injecting cash into a system that now has a direct on-ramp into digital assets. These forces are not happening in isolation. They are converging simultaneously, and the result of that convergence is what the most prepared investors in this space are going to benefit from enormously over the coming months. Voice. Let's bring it back to XRP specifically, because this is the asset at the center of today's story, and it deserves a focused breakdown. XRP right now is sitting at a critical technical level, and the price action is going to depend heavily on what Bitcoin does in the near term. The key level to watch is the 192 region. That's the floor you want to see XRP hold. If it loses that support, things could get choppy in the short term. But here's the bigger picture that you should never lose sight of when short-term price movement creates noise. XRP is now listed on Vanguard's platform. Institutional investors who use Vanguard can now access XRP exposure through a regulated, compliant ETF product. That changes the demand profile for this asset in a fundamental way. You are no longer just talking about retail traders moving in and out of positions. You are talking about long-term institutional capital potentially flowing into XRP through one of the most trusted platforms in American finance. That is a completely different game. Voice. Here is something I want every single person watching this to internalize because it matters more than any price prediction or short-term trade setup. Crypto does not become a mainstream asset class through headlines. It doesn't happen because someone famous tweets about it or because a YouTube channel says the number is going to go up. It becomes unavoidable when the platforms make it available. When a Vanguard, a Fidelity, a BlackRock puts a digital asset ETF on their platform and makes it just as easy to buy as a share of Apple stock, that's when the floodgates open. Because suddenly you have retirement accounts, pension advisors, wealth managers, and everyday investors who never would have touched a crypto exchange, all gaining exposure through vehicles they already trust and already use. Vanguard just became that vehicle for XRP, and that access, once it's open, doesn't close. The category is created, the infrastructure is built, the flows will follow. Voice. Let me walk you through what the institutional FOMO cycle actually looks like, because this is something worth understanding clearly. It starts with denial. The major players say the asset class is too risky, too speculative, not appropriate for their clients. We heard every single one of those arguments from Vanguard's CEO on camera. Then comes the resistance phase, where they hold the line even as competitors start moving. Then comes the quiet shift, which is exactly what we just witnessed with Vanguard silently adding XRP ETFs to their platform without any announcement. Then comes the acceleration phase, where once one major player moves, others rush to follow because the cost of being left out becomes too high. And finally comes the full institutional adoption cycle, where digital assets are simply a standard part of the portfolio conversation at the biggest firms in the world. We are right now sitting between Phase 3 and Phase 4. The quiet shift just happened. The acceleration is coming. Voice. What I find genuinely fascinating about this moment is how little attention it's getting in mainstream financial media. If BlackRock had done something of this magnitude, it would have been front-page news on every financial outlet in the country. But because Vanguard did it quietly, without a press release, without a CEO going on CNBC to announce it, most of the financial press missed it entirely. And that's actually bullish, if you think about it clearly. The best setups in any market are the ones where the smart money is moving before the crowd realizes what's happening. Vanguard's institutional clients are getting access to XRP today. The broader public is going to find out weeks or months from now when the flows start showing up in the ETF data. By then, the positioning will already be done. The people who are paying attention right now, watching reports like this one, are the ones who have the opportunity to be ahead of that wave rather than chasing it after the fact. Voice. Now let's zoom out and look at the total crypto market picture, because it provides important context for everything we've been discussing. The total cryptocurrency market cap is sitting right around $2.94 trillion. Bitcoin is trading above $87,000, up nearly 2% on the day. Ethereum is holding above 2,800. These are not the numbers of a market in crisis. These are the numbers of a market consolidating and building energy before its next major move. And when you stack the technical picture on top of the fundamental catalysts we've been discussing today, the Vanguard access opening, the institutional arms race beginning, the Fed liquidity injection happening in the background, you start to see why so many experienced market participants believe that the next few months in crypto are going to be unlike anything we've seen in quite some time. The pieces are all aligning in the same direction at the same time. Voice. I've been saying for a long time now that this cycle would have two distinct phases. The first phase is the institutional cycle, where the big money flows in through regulated products, where ETFs get approved and launched, where the Vanguards and the BlackRocks of the world stop fighting it and start facilitating it. That phase is happening right now, in real time, and today's Vanguard news is one of the clearest confirmations of that thesis we've seen yet. The second phase is the utility cycle, where XRP and other digital assets begin to prove their real-world value, not just as investment vehicles, but as functional infrastructure for global payments and financial systems. That phase comes next, and it will be driven by adoption at the enterprise and governmental level. But before we get there, we're going to see the institutional money fully position itself. And the window for that positioning is opening right now, accelerated by exactly the kind of move Vanguard just made. Voice. So here's where we land today, and I want to be crystal clear about what the takeaway is from everything we've covered in this report. Vanguard didn't endorse XRP. They didn't call it the future of finance. What they did was more powerful than any endorsement. They allowed access. And in institutional finance, access is everything. Access means client demand was so strong and so persistent that even the most conservative major asset manager in the country could not justify holding the door closed any longer. Access means that trillions of dollars in client capital now have a pathway into XRP exposure through a regulated ETF on a trusted platform. Access means that every competitor, from BlackRock to Fidelity to every regional wealth management firm in between, now has to decide whether they're going to offer the same or risk losing clients to someone who will. This is how a generational shift in asset allocation actually happens, not with a bang, but with a quiet platform update that changes everything. Stay informed, stay positioned, and we will see you in the next report right here on Today Assets Report.